Welcome to Market View with Ike Iosa and friends. This show that not only reveals and analyzes the inside story on today's market news, but also uncovers the areas where investors can make money right now.
Hello, good morning. Mike Iosi, your host for Market Guest, my very good friend, Mrs. Erin Swenlin. Hi, Erin. How are you?
I'm doing good. Trying to stay cool.
Well, Erin, I was looking at the market, and for the last 5 days, breadth indicates that the market has been rather oversold. But until today, it hasn't been able to mount a decent bounce from an oversold condition. Usually, that is an alarming sign. So I'm curious to hear your thoughts.
Yes, absolutely. Well, it's definitely been an interesting week, to say the least, for the S&P. You know, we have been talking a lot about the market being very oversold or overbought, depending on where we are. And, you know, we were getting into some pretty overbought readings, but then we were seeing all these indicators, you know, like our Swenlin trading oscillators, et cetera, falling. We were getting, we got two bullish downside exhaustion climaxes on Tuesday and Wednesday. And so we were expecting a little bit of a bounce here, and instead we really got just a continuation of the decline, and that says a lot to us. You know, it's once again getting a bullish signal and having it not turn out. And to me, that is a sign that the bear market is definitely still in force, and it's still looking very weak. And of course, that's easy for me to say after the last couple days of downside, but when you look at the charts, it's just looking ugly out there.
Well, let's take a look at the first chart, the SPY for the last year.
Right. So usually I bring my 5 months, but I decided to bring the longer term picture, mainly because I wanted to point out from that 2022 high in January through the March top, there's that declining trend line. And I was thinking that if we could get above that maybe, just maybe, this bear market might be over for us. But you know what? It didn't. And it actually didn't even reach it to test it. It came really close, but then it failed. In the meantime, getting our way up there, all of the indicators got oversold, and it was, overbought. So we were expecting a downturn at one point or another. And you know, our thoughts were that if it was going to stay overbought, then and still rise, that okay, maybe this bear market is over. So there were a lot of things, but then when we failed at that declining trend and prices started to fail, and all of those indicators, our PMO. So here's just an example, and I don't have the charts in front of me, but if you go through, I'm on stock charts, and if you go into their industry summary, you can click through 104 different industry groups. And I went through them because on DecisionPoint Diamonds, I have to bring some diamonds in the rough to the table, and I went through them, and every single one had overbought PMOs that were falling. 104 industry groups. That is terrible. That is, the market is going to keep declining. I mean, there's really nothing there that suggests that we're going to hold the current short-term rising trend. If you could see that June low, it's looking pretty ugly out there. Today, you know, we started the day off. It looked like, you know, off the jobs report, we got positive action. Looked like we might have a really solid reversal in the process, and then it completely fell apart. It's continuing to move lower. It's not good. It's just the best I can put it. I'm expecting more decline. I just don't see any reason why we wouldn't. We do have some oversold breadth indicators, as you noted, but that's a problem too, because you need leadership, and when you have no industry groups with rising momentum, and you have very, very few, I think I counted earlier this week, only 10 stocks in the entire S&P have rising momentum. 10. I think we're up to 20 now. But you need some leadership. You need something, shifting to the upside, and just there's nothing there. I mean, there are no pockets of strength. I have been looking, trust me.
How about the short-term oscillators?
Yes, and so I think this one, our Swenlin trading oscillators, you've followed them, are pretty right on. And one of the things I've been pointing out on this chart and the next one we're going to look at is we did see our STOs rising, but then they flipped. Right when we got the big decline, we saw a flip. They started moving lower. And everybody's talking about all these oversold indicators. And yes, the STOs got oversold. But look at where they were back in June. Look at where they were back in January and February. I mean, they are not really oversold at all when you look at it in that case. And certainly the participation is, like I said, in the tank. I mean, 4% with rising PMOs. I mean, only 13% with stocks above their 20. I mean, there's no leadership here, and I expect to see these STOs drop further into oversold territory. Then we can start talking about a reversal. But right now, I think these oversold conditions, those PMOs rising, stocks above their 20, I just don't see them improving. And they could stay low for quite a while. We could see them for, a couple weeks being in this oversold territory if things are just, dire, which they're starting to look that way.
How about the intermediate term?
Now, this is another great example of not being oversold. Yes, we have only 7% with crossover buy signals. That's oversold. But these indicators are not. Yesterday was the first time we actually got some negative readings, and that was on the ITVM. They've been falling since that top. You can see, I mean, they've been really great on calling these pivots. Usually it's the STOs, but right now these intermediate term indicators have really been helping us see these changes in direction. And they're not oversold at all. I mean, you can see, they're not oversold at all. So in the intermediate term, that tells me we're still definitely vulnerable for more downside, even though breadth is very oversold.
The dollar has been the stellar performer of the year. So I'm curious to hear your thoughts on a technical basis.
It certainly has. But, we had this really bullish formation, right? Flat top, rising bottoms. That's your, textbook ascending triangle. So we were expecting a breakout. It was taking a while, but we finally got that. And a natural pullback is happening today. And it's still holding that support level. And all the indicators are still very, very strong. I see the dollar rising even further, which of course brings us to the next chart, and that is gold. So obviously gold, if the dollar's rising, it's going to put downward pressure on gold, just simply because gold's denominated in dollars. So they have an almost perfect inverse relationship. We got to this support level right now here on GLD at about 157.50, and we are seeing a nice bounce, kind of forming a reverse island, if you will, on that bottom. The thing I really like seeing, and let me see if this is still the case. Let's see, dollar's down 0.10%, but gold GLD is currently up 1.17%. That tells me that there are buyers, that we are seeing more buyers of gold right now. And maybe we're finally starting to see this flight to gold happening. But I have to say, with the dollar looking strong, looking stronger as it moves forward, that's going to be some serious downside pressure for gold. But right now, today anyway, it's flouting that and rising and getting more buyers. So, the PMO's flat. RSI is rising, stochastics are rising. I could see a nice little rally here for gold, but I do have that reverse flag that I've annotated. That's still a problem for me, that we could still see that breakdown below the support level. But I think seeing more buyers of gold today really is interesting and could mean that they could start traveling a bit more in concert with each other, the dollar and gold. So it's an odd thing to be bullish on both the dollar and gold. But at this point, I'm looking at being bullish on gold. I really like this bounce off of the support that we're seeing. And again, having extra buyers out there for gold today, I think that that's a really good sign combined with these indicators that are trying to improve here.
Okay, and how about our last chart, the diamond of the week?
Yes, I always try and bring a diamond of the week. I've started on the ZP diamond. On Wednesdays, I do what's called ETF Day. And so I look strictly at ETFs, and I present 3 on Wednesday. So those of you who are ETF followers and maybe weren't interested in diamonds because we were just covering stocks, I now have ETF Day. So I am bringing an ETF from ETF Day, which is DOG, appropriately named. It is a short of the Dow 30. Now, there are certainly other vehicles, but the problem is most of them are what we call juiced, 2 times, 3 time inverses of the various sectors. I think SDow is a companion, if you will, to this particular one. This is not juiced. So if you're not a volatility, if you can't stomach that kind of thing, I really like DOG here because not only is it starting to break out, you're also able to set a nice thin stop on it. You don't have to be, beholden to the kind of volatility you'll get on those juiced inverse ETFs. So that's why I presented this to our subscribers. Right now, it looks like we might be starting to build what could be a bullish engulfing candlestick here. We had the breakout, we had the pullback right to the breakout point, textbook, and now we're starting to see that move to the upside on DOG, which of course means the Dow, we're thinking, will be continuing lower. So while the upside potential on this one maybe isn't as exciting as some of the inverses are, I think this is a bit of a safer way to play an inverse without having to go into that juiced area. And I like this breakout. And certainly the reversal today is making me a lot more confident in this particular ETF.
Erin, anything else you'd like to add?
Well, I would add that our free DecisionPoint trading room has been picked up by Stock Charts TV. So if you go to our homepage on our website and sign up for our free newsletter, you'll be able to get those links right after they are presented. You'll get the link to the YouTube videos. We now have our old ones archived in there for the past, 6-7 weeks on YouTube. So welcome you to go and get at least on our free mailing list. And of course, we would welcome you as subscribers. We're getting a lot of positive feedback right now on our calls on diamonds, which have been outperforming the FE for weeks now. So, I think we're on the right track here at DecisionPoint.com. But at a minimum, guys, go to our homepage, sign up for that free newsletter, and you'll get all of our free material every Monday. So if you're not interested in subscribing, you can at least get a taste of what we do.
Erin, thank you. Have a great weekend.
You as well. Nice holiday weekend.